What's up, guys, and welcome to another episode of the LivBtr Podcast. I am your host, Jay Ciano, and on today's episode, we have my friend Neha Govindraj, the founder of Bonside. Bonside launched in 2022 and provides growth capital to service-based brick-and-mortar businesses. Previously, as a consultant to Bain, Neha also co-founded Glowbar, a successful skincare concept in the Northeast. Sabre and I work very closely with Neha and her team at Bonside, and we share many clients and friends. We explore that on today's episode. I hope you enjoy.
I just want to have peace. Pay for the bill, let them take my car, never see the receipt. Good health, we prize, but everybody around prosperity.
What's up, guys, and welcome to the LivBtr Podcast. This is your host, Jay Ciano, and this is the show for people trying to optimize every area of their life. Let's go.
I just want to have peace.
Welcome to the LivBtr Podcast, Neha Govindraj.
Thank you.
How are you?
I'm good. How are you?
I'm doing great, even better when I get to see you and hang out and talk about all the things.
We have so much fun.
We've
done cool stuff.
We have, and we're just getting started.
I know. There's so much to do.
So the fact that we know each other is awesome.
Yeah.
But there's a lot I don't know.
Yeah.
So why don't we kind of start from the beginning, if you don't mind, wherever you want to start. Just give a little background for the listeners on who you are.
Sure thing. So I grew up in South Florida, and then I went to Chicago for school.
We're in South Florida.
It's a town outside of Miami called Weston.
I know it, yeah.
Oh, you know Weston?
Yeah.
Okay, great.
Yeah.
It's funny. I feel like Weston is becoming more relevant.
Dan Marino lived there for a long time.
Yes.
Who's a family friend of ours. That's how I know it. Yeah.
Oh, amazing.
Yeah.
Well, one, Dan Marino. But two, there's been more and more businesses that are opening up in Weston. And there's been a couple that I've met while at Bonside, and they have a location in Weston. And I just think it's so funny because up until now, no one knew what Weston was when I would talk about Weston. But part of that's probably due to the Miami migration and people becoming familiar with the suburbs. Yeah. So I grew up in Weston, and from there I went to Northwestern, studied econ, computer science there, and then started my career at Bain. And while I was at Bain, I was working in both the private equity practice and the retail practice, and did a short stint at Glossier while I was at Bain.
I didn't know that. Okay.
Yeah. That was the first kind of foray into the beauty industry for me. They were early at the time. It was like Series B. Yeah. So it was early days. Spent a couple months there, and it was through this thing that Bain has where it's called an externship, where you could go work at another company for a handful of months, assuming that you came back. So 6 months there, and then I came back. And then from there started Glowbar with my co-founder, and we spent about a year ideating on the concept, really building out exactly what we wanted to build and how we were going to build it, what the customer experience was going to be like, what products we were going to use, how everything was going to be structured, price points, all the good stuff. And
a lot of that was obviously inspired by your time at Glossier, I'm assuming. I mean, it lines up, somewhat.
No. So actually, Glowbar, Rachel, my co-founder at the business.
Sure, I know Rachel. She's great.
She was in the beauty industry for about a decade and third generation esthetician, had the idea for a 30-minute facial, and we partnered up because I had some relevant experience at Glossier, but I think it was actually more the Bain background that brought us together being essentially counterparts in launching and being able to do so with complementary skill sets.
Sure.
And so went into building Glowbar, scale that to a handful of locations. And then while I was building Glowbar was how I was inspired for the idea to build Bonside.
Why,
which we can get
capital?
Into. Yeah. Yeah, capital. That's it's not just sitting there when you need it.
It's not. I learned that as well, when I decided to start my first business. Let's get into it. So wherever you want to go from, your experience at Glowbar to starting Bonside.
Yeah, for sure. So, I think one of the things that became really apparent to me, especially back then, was when going into building a business, your first thought was venture capital when you thought about raising capital for a business. And at the time, I didn't really consider any other option of capital other than equity capital.
Yeah.
And I think when you're day zero and you don't have anything built, that kind of makes sense because the risk reward is aligned there.
Sure.
And so that made sense, but it was mostly angel investors, family, friends. And then as I started to think about capitalizing the business beyond day zero, so once you have locations up and running or once you've generated some revenue, again, at that time, it was just like, you want to raise capital? Call VCs.
Sure.
And I met with a ton of VCs. And there was just a clear dissonance of what they were looking for from a returns profile and what a brick and mortar business can offer.
Sure.
And it was in those conversations that it kind of forced me to take a beat and say, is this really the right instrument for our growth? And at the time, if you decided it wasn't, really all you were left with was traditional debt.
Right.
And it kind of feels like you're falling off a cliff of options. It's like you've got this like top tier, it's in the news, TechCrunch articles, headlines, value add, VC. And then, oh, you don't want that? Okay, go to a local bank, show up at the branch, beg that they even take the conversation.
Yeah, of course. So that was more my experience. You know,
Yeah.
for me, it was just trying to figure out how to get a loan.
Right.
And it was near impossible for especially with the nature of my core business, Sabre.
Right.
You know, the fact that we're working on leasing deals for the most sales as well, but the
Yep.
majority of our business is leasing. So
Right.
we're not generating cash flow, the
Right.
way that a typical business would. So, we're working on deals today that will get paid on 12, 24, plus months from now. And
Totally.
banks don't love that. But,
Right.
so I mean, understand it. And,
Yeah.
which is also why I'm so fascinated by what you guys are doing.
Yeah.
And we share a lot of clients and probably going to share a lot more clients.
Absolutely.
Yeah. Because we can't do what we do without capital for our clients.
Right. And honestly, it was kind of, the more time I spent thinking about the gap that existed here, I was also just becoming more bullish on the fact that there needed to be an option in between.
Yeah.
Like it really felt like there was an ocean in between venture capital and traditional debt, and there was really nothing else in between. And if you think about where we are today as a society, multi-unit retail is on the rise. There is a growing population of accredited investors. We've lived in a world where every door was shut and we hated it.
Right.
We're going to continue to have these physical businesses exist. You're seeing alternative forms of capital launched for the tech industry.
Right.
So all of these trends are happening. And it sort of begs the question of, there probably needs to be something that exists that's almost like a financial institution for the brick and mortar industry.
So it's interesting because, again, knowing what I know about capital, were you borrowing the model from another industry that you knew this existed in some way, or was it just you're aware that that it wasn't available really in the space that we live in?
Yeah.
How much does it exist elsewhere?
Yeah, it's a good question.
Yeah.
So I spent a lot of time talking to different people in different industries, and I would say ultimately, the instrument that we crafted at Bonside to provide financing was inspired by a couple of different sources. So I looked at how franchising deals were structured. I thought that was interesting.
Yeah.
I knew that not every owner and operator wanted to give up that operational control, but I thought the way that they structured the agreements, there was something to learn from there.
On the actual, the franchisor-franchisee,
Yes.
agreements?
Yes.
Not
So-
necessarily like an SBA loan, which is how
Correct.
a lot of them are obviously funded.
Right. More the franchisor to franchisee relationship.
Got it.
So looking at that, because that is a tool for expansion.
Sure.
Looking at, and this is relevant today too, you were starting to see more private equity firms do roll-up strategies, and even looking at how they structured those deals,
Right.
where they would buy the concept out, but then kind of pay out a royalty to the original owner, looking a bit at how those were structured. And then looking at the traditional revenue-based financing, which a lot of kind of older institutions had practices around. And then looking at the tech industry and seeing how venture debt was structured and how, recurring revenue agreements were structured, and looking at all of that and saying, okay, what are the elements that you can pick and choose from each of those to create something that's genuinely purpose-built for the brick and mortar industry.
Right, exactly. So explain, somebody comes to you and they have locations.
Yep.
How many do they need to have in order for you to potentially help them.
Yeah.
And how does the conversation typically go? What are you looking at? And then explain, exactly how you're securing the loan, essentially.
Yeah. So I'll start by kind of describing the agreement itself, because I think it'll shed a little bit of light on what we then look for in a business. So we call our agreement the Repeatable Revenue Agreement. And the way it works is we provide a growth amount of capital, so growth capital, to business owners.
Sure.
Today, our check sizes to start are between $250K and $1 million.
Okay.
And then once we write our first check, we can continue writing subsequent checks beyond that. Rather than taking a percentage of ownership in your business in exchange for that, we do a percentage of sales. And we collect that not in perpetuity, but we put
a percentage of sales on the existing locations.
Yes, but the agreement is with the holding company, the parent entity.
Right.
And so if you open subsequent locations, that will get looped into the revenue share.
Right.
But we put a fixed cap.
Okay.
So really what we're looking for here is a dollar return.
Okay.
And so generally today our cap varies, but you could say 1.5x on average.
Does it vary based on the risk potential of the investment?
Yep.
Yeah.
So it varies based off of the business. It also varies based off of the environment that we're in,
Of course.
Just kind of taking into account interest rates, things like that. And so let's say that the cap is 1.5x. So that would imply that we are looking for a 1.5x return on the amount financed. So if we financed you $1 million, we're looking for $1.5 million back. And we don't want it back overnight.
Right.
We want you to have time to go use that capital, realize a return from that capital, which ideally is far greater than 1.5x, before you've had to pay us back.
Explain that. Yeah.
Yeah. So, there's another structure where, like merchant cash advances,
Mm-hmm.
where it's very similar in that it's revenue-based percentage paybacks, but it's shrunk to a year-long period.
Right.
And
Which could be painful.
exactly.
Yeah.
It's like, you're looking at like 20% of daily sales, and that's probably eating into your net income on the business.
Right.
So it's just a really high payment to take on. And it makes sense if you're using it, let's say, for like
Short term.
yeah, exactly.
Yeah.
Like you've got a purchase order
Yeah.
and you want to float that capital.
Right.
Fine. A build out is a meaningful expense. That is a growth expense, and it takes time to actually realize a return from that build
Sure.
out. And so what we do is we will diligence.
And you're not looking to do one deal with, essentially fund one location, right? I mean, ultimately you
No.
want to have a partnership
Right.
where as they're growing and becoming more and more successful, you're working with them on all future locations.
Yes.
Yeah.
Exactly.
Yeah.
And that's just because our broader goal is to be a partner to the industry. It's
Totally.
not about
Yeah.
the one transaction.
Yeah, I love
or,
that. Yeah.
I feel like that's where you and I are so aligned on
Totally.
how we think about the industry. So instead what we do is we take on the risk of a longer payback period, and we build comfort in that by diligencing the business fully. And so if we can diligence your business and build confidence around it, we will structure the payback such that your revenue share percentage is low single digits, if not lower.
Okay.
And so that way, when we're kind of modeling out the repayment timeline, it's looking more like 4.5 years before you've paid Bonside back.
Right.
And so that's how the agreement is structured. And really what that means is it's not the right agreement for a pre-existing concept. We really like to come in when there's a base of revenues that we can underwrite against.
Sure.
Because we aren't getting equity-like returns, so we can't take equity-like risk.
Right.
And so it's really this in-between solution of, I think the perfect businesses are where you've got your couple of locations up and running. You're not quite ready to take on private equity or to get acquired or to sell your business, but you want to accelerate growth at a faster pace in the interim than your cash flows would allow. That's where we would say, hey, slot Bonside in.
Right.
And we can help with that.
Do you work with both corporate and franchise clients?
We work with, predominantly our base today is all corporate owned businesses. We have a few folks in our portfolio that are multi-unit franchise owners.
Okay.
It's just the same requirement there. They just have to come in with at least 3 concepts up and running of the franchised concept.
3 of the same franchise brand?
Yep.
Yeah, right?
Exactly.
Okay. That
Exactly.
makes sense. Because a lot of those companies have more than one franchise that they're working with and so on and so forth.
It's basically like if you're buying a franchise and it's your first one, we won't finance that. But if you've bought the rights for all of Florida,
multi-unit operators.
Exactly.
Yeah. And where, to switch gears for a second,
Yeah.
what verticals do you guys service?
So we are focused on brick and mortar services.
Yeah.
If you have 4 walls and you sell a service that can't be purchased on Amazon, you're in our box.
Okay. So you're not specifically looking at the restaurant or the health and wellness or it could be really anything that has a physical location.
And a service. So
And a service. Okay.
the way I describe it is there's 3 primary categories. The first is hospitality, food and beverage.
Right.
The second is wellness, so boutique fitness, beauty, things like that. And then the third is traditional services. So that's like a car wash, a daycare, the things that like run our lives.
Makes sense.
Yeah.
Great. And of your existing portfolio, what would you say it's made up percentage-wise of those 3? Are you heavy on one side currently,
Yeah.
or is it balanced?
So we invest out of different vehicles, and
Yeah.
I would say on a vehicle basis, we aim to keep that balanced.
Yeah.
But across the board, if you look at all the investments that we've done, we're mostly balanced. I would say if there's a heavier weight, it's probably on the hospitality side.
Okay.
Largely because I think there's a lot of I think the hospitality industry for a very long time has had to lean on creative structures. And so they're just used to creative structures. And when you think about some of the creative structures that are in place today, not all of them are the most friendly to the owner operator.
Sure.
And so there's a natural opportunity to almost graduate from those structures and come structure something with us where you're not paying us 5% of revenues forever. You're not paying us 20% of profits forever. You're just paying back a fixed finite amount, and then you own 100% of your concept, and all the distributions are yours.
And we obviously share a mutual friend in Ann Malum. I was so excited to introduce you to, and I know that I knew that would go somewhere special just based on what Ann's accomplished in the space, and her approach to capital and her all of her experience growing SolidCore more specifically than her other ventures. But
Right.
I'm just curious, like, what are her thoughts when you guys first were discussing this? I know she's a huge fan and really respects what you guys are doing.
Yeah.
Yeah.
We're honestly in such strong alignment in that the way that she scaled SolidCore was so methodical.
Right.
And it was pretty much organically financed for the first 20, 25 locations before she brought on external partners. And the external partners that she brought on were growth equity, private equity folks that she could have a really definitive conversation with and say, this is exactly what I'm going to do with the capital. This is exactly what top line revenue is going to unlock for you. This is exactly the EBITDA it's going to unlock for you. And this is exactly the valuation multiple you can expect off of that.
Yeah.
And it was so formulaic. And even her build leading up to that point was so formulaic. And it's worth distinguishing between venture capital and private equity.
Right.
Because it's 2 really different return profiles, asset classes. And so
private equity also is typically a little bit further along in the growth process,
Right.
obviously.
Right, exactly.
Right? So a lot of folks who might want to talk to private equity are not at the stage in their business that's even an option for them.
Right, exactly.
Yeah.
And so I think where Ann's perspective is aligned with what we're doing here is even at our event last week that you were at, she said it. She was like, this is something I would have used in those early days to help accelerate that scale because so much of that was coming from cash flows and reinvesting cash flows into growth.
Yeah, that's kind of why you guys have had way deeper conversations about it than I have. And I'm curious how that would have played out if it was an option early SolidCore, exactly how it would have impacted growth.
Yeah.
Right. It's interesting because, and I think that's the point is, without money, you can't grow.
Yep.
And, that's why we're working together because, quite frankly, a lot of our clients are especially in this environment, it's not easy to get money right now, especially. Right. So, there's always a need for it. But to your point, the economy and just where everything is kind of at the moment also has a major impact on that.
Yeah. 100%. And I think it's worth saying, Jay, I don't think at the end of the day, entrepreneurs are scrappy and they are hustlers. They will figure it out. If they don't get the capital from Bonside, they will figure out where they get the capital from.
Or they won't.
Or they won't.
Yeah.
But there's some instances where they do, and they will totally figure it out. And I think part of what we're doing is, one, solving the gap and saying, hey, for those that don't have options, here is finally an option.
Right.
And then there's also a group of folks that have options that will figure it out, that will like go and pitch 1 million people if they need to figure it out.
Sure.
And we're saying, hey, you can stop spending that much time on this. Like you now have someone you can reliably go to. So in the way that if you're building a tech company and you want to capitalize your business, you don't need to think about where do you even start? You're just like, okay, I'm going to email these 20 VC firms. I'm going to get in front of them. I'm going to pitch them. It's a numbers game, and we'll see what pans out. I'm going to make a pitch deck. You can Google. You can find on Reddit all the things you need to do. There's Twitter feeds about it. And now for a brick and mortar owner, it's like, hey, you don't need to like go try 8 different things to figure out where you're going to source capital from. You have a place you can call. And that is like, I would say, the part of the mission that even when starting Bonside was something I was attracted to building around was, how do you build something that makes people feel safe and that they have a partner and someone has their back? Like, I think it's that slight like psychological, because it's like every operator needs to know that someone has their back.
Totally.
And building a brick and mortar business can sometimes feel isolating.
And every business is so different where, some take less money up front to get up and running. Right. And are profitable a lot faster, especially if they understand how to negotiate, their deals and increase the ROI, as much as possible. And there's so many factors involved there.
Totally.
And especially on the franchise side, I oftentimes see, the bigger square footage, more expensive build out concepts are really, they're not profitable for, 2 years plus in those cases, right? So you're sinking a lot of money in, and you got to work really hard to, to break even. Yeah, it's not easy.
No, totally. I mean, it's why what you do. Oftentimes, most multi-unit operators have not built a multi-unit concept before.
Correct.
And so by the 10th or 12th location, you're like, oh, I don't need to do that on every lease. I don't need to give that. Yeah. And hearing that at location 1, 2, 3 will help kickstart a completely different growth trajectory. Yeah. And so it's just so helpful. Like part of the battle is just knowing.
Completely. And actually, that's a good point. And I'm curious, are you guys reviewing the leases?
We don't.
You don't?
No, we don't. We do as part of diligence.
Like health score, it's obviously there's a risk factor involved in a bad lease.
Yes. So we do, as part of our diligence, we review existing leases.
That's what I meant.
Yes. We don't review their new leases if they're in our portfolio or anything like that.
Got it.
But we do look at existing leases, and
I would hope so, because they're liabilities, obviously.
Totally. Yeah. And I think that's where it's like, it's very beneficial for us to have folks like you in our network that are also, I know if a business is working with you, that to us is a good sign of, okay, we know that their locations are strong, and we know that they've got good deals there because they're working with Jay. Yeah, and that provides comfort too.
I'm going to ask you for a testimonial later. No, that's great. And what would you... how do most folks get in touch with you guys? Is it a lot of word of mouth now? Like, has it been more recently, or how would you say most come in?
I would say it's predominantly word of mouth. Yeah. We don't do, any paid ads or paid marketing, but it's mostly through other folks in the industry that are almost, I feel so weird calling them channel partners, because it's like friends of the industry that we've gotten to know, and also business owners. Yeah. I think, if a business owner is thinking about capitalizing their business and is struggling with that, and of a solution, you're not holding that back. Like, you're not gatekeeping a financing solution. Sure. And we're really sort of the only player that you can think of when you say brick and mortar financing. There's no one else that is just exclusively focused on the brick and mortar sector and is just doing financing for brick and mortars.
It's pretty amazing. I mean,
it's crazy that it doesn't exist.
It does. Yeah, it is. It's crazy.
But as a result of that, I think when folks are having conversations around financing, our name comes up often, and that's people will email us in and things like that.
You guys are doing such a great job creating community also within the space, which is great. And the event that you just mentioned, it was awesome. And it's so interesting for me because there's, it's really the crossroads of the real estate world, and then the fitness, wellness, the hospitality, all the, we completely overlap really from a Sabre perspective. There's a lot of synergies.
Totally. There. It's so interesting because I do feel like that crossover happened so organically.
Totally.
It wasn't, when I think about like early venture pitch decks, real estate wasn't mentioned as part of it. And I think we've just naturally built this community because if I think about where I spend my time just talking to folks about Bonside all day, every day. And the connections that just like organically formed and naturally sparked kept on being with real estate folks. Yeah. Because it was just like, we're having the same conversation. We're thinking about the same things. Like we're focused on the same things.
Yeah.
And then it was like, you're hosting an event for this? We're hosting it. Wait, we should just invite the same people. We should just do it together. And that's been everything we've done to date.
Which is, again, interesting because I feel like it's a certain type of real estate person that is attracted to what you're doing. And it's the people I think that are like-minded and working in the same, space, essentially, right? Yep. There's a lot of retail brokers that I don't think this is as relevant for.
100%.
Which is why it was great to see all of my real estate friends at your event because they're the ones that, are very similar and doing similar things to me. So it was awesome.
Yeah, it's awesome. There is a multi-unit retail community if we can bring it together in the right way. And there's a mix of, now when we kind of assemble these events, there's a mix of investors and brokers and operators and developers that are all actually really focused on multi-unit specifically. And it's awesome to just start to bring rooms like that together more often and sort of establish, hey, we're all talking to each other separately. And you've done this too. I mean, your dinner was like this too. It was just a bunch of multi-unit operators and multi-unit almost service providers, but folks that care about the multi-unit industry put together in a room. And it's like, oh yeah, these are my people. These are like who I should be talking to.
Yeah. And then I love throwing in like a Nikki Cass, like I feel like it's, for me, like I get so inspired by even just people that are essentially like businesses, like he's got a substantial business and he's just a person with a small team that's creating content because I think content is so important in businesses, especially today.
Totally.
When I started creating content 2015, 16, it wasn't, people thought I was crazy, especially in the commercial real estate space. So, but it's fascinating how welcomed it is and almost necessary it is in most industries. Do you guys look at that at all with clients? Just if they're an earlier stage client that maybe has a handful of locations and, are there any metrics that you'll look at that are not exactly tied to the numbers per se?
Yeah, I think that's what honestly differentiates us from the way a traditional underwriter would underwrite a brick and mortar business. There's a lot that we do as it relates to the data metric that's very specific to brick and mortar that I don't think a traditional underwriter would look at. But in addition to that, we are looking at Google reviews, Yelp reviews, pictures, social media presence. We're seeing like what press looked like recently, and we're factoring all of that in because it helps us understand the data better when we're looking at the data. And the way that I think about what we do is like, how can we get to a yes? And so if it's a no, it's very clear why it's a no, and we can share exactly why back to the owner. But having all of those qualitative measures helps inform how we get to a yes, and if it's a yes, and why the data looks the way it does.
Is it sometimes a not right now?
I would say if it's not a yes, it is always a not right now.
Yeah.
It is never a flat out no.
Yeah.
Because if you think about what we do, what we're looking for is repeatable revenue patterns. So we want to see that you have scaled locations and good customer loyalty. We want to see profitable locations. So we want to see that the locations are turning a profit. And then we want to see a strong corporate balance sheet. So either you're profitable or you're close to profitability, but your balance sheet can support it.
Sure.
So we're not like bridge capital.
Right.
And so if it's a no, we can just very clearly say, hey, locations 4 and 5 are not profitable yet. It seems like you're ramping up. Once you're ramped up, give us a call. Yeah. Or, we're okay with ramping. But I guess it's very actionable when we say no, because it's honestly a formula for us to underwrite. So we can tell you what part of the formula broke versus it being investment thesis driven and needing to believe in like the big vision and the 50 to 100 location story. Like, actually, none of that matters. We're just looking at today's data, the quality of today's data.
The health of the business.
And the health of the business, which is what operators care about too. So it works.
I think it's great feedback. That's very valuable feedback for businesses.
Yeah.
So they can take that, incorporate that into their strategy, obviously. This is the LivBtr Podcast, so we do have to switch gears to hear about your overall health and wellness journey. So let's talk about that a little bit. Do you have a routine of any sort, or is every day different? Tell us about what you focus on.
I'm a routine person, so I definitely have a routine.
That does not surprise me.
I know. I'm like, and I'll change up the components of the routine sometime, but I'm so rigid in keeping a routine.
So am I, yeah.
Yeah, I feel like you're also a big routine person. I wake up early. I like to wake up around like 6:30, and I will have a cup of coffee. I will read something that is nonfiction or creative, like something that just puts my mind in a totally different place that is unrelated to my work day.
Have you touched your phone yet?
No.
In that process?
No, I purposely don't.
Yeah.
So I won't touch my phone. I'm like, there's nothing I need to read at 6:30 a.m. That's
totally
urgent. So I'll read something that just like totally takes me out of like my headspace. And I only read for like 8 to 10 minutes. This is short.
Yeah.
And then I will immediately...
That's 8 to 10 minutes longer than I'm reading. So
I start off with a minute and then add it on. And then I immediately open up like a journal and I'll just free write whatever comes to me. And sometimes it's phrases, sometimes it's sentences, but I try to stay in that trance state a little bit.
Love that.
Really, I'm like trying not to like use my brain actively and just sort of like let my subconscious speak, I guess. And then only after I've done that will I then pick up my phone. And then I'll look through emails. I'll look at the news. I'll catch up on text messages, like things like that. And then by like 7:15, I get downstairs to the gym and I work out. And I like switch up what I'm doing all the time. Come back up, shower, get ready, get out the door, and go to work. It's like a repeatable, it's so easy.
Yeah, I have the timing of my days are very similar.
Okay.
Today was for no reason a 5 a.m. morning. I
oh my gosh.
Idea why. And
you have kids, so I feel like that changes things.
Yeah, but they're not up at that time.
You're like, I'm not blaming this one on them.
No, definitely not. It does change things for sure, but I don't, I'm not the 4:30 a.m., 5 a.m. person because that affects me later in the day typically.
Yeah.
I fall off a cliff somewhere.
Totally.
And I stop drinking caffeine after 11. So
okay.
So I'll stop.
Yeah.
So I can't really look for that alternative to
pick you up later in the day.
Pick me up a little bit. Maybe a cold plunge here and there.
I really want to get into it.
Yeah.
I mean, it seems like you're pretty religious about it.
Oh, I am. It's a big part of the...
And do you notice a meaningful shift?
I do, from the standpoint of, like I'm like super even keeled now, like regardless, somebody could like horribly cut me off in traffic and it doesn't even like register on my, so it's interesting. It's kind of, it definitely has chilled me out quite a bit. And then also right after it, I have a crazy amount of energy. So I typically use that to my advantage to work out. That's the goal at least.
That's awesome. I honestly, and I will randomly add in different things. Like I'll meditate or I'll listen to something. And it's always like, I think about the entrepreneur's journey as being like a sine curve or cosine curve where it's just like, the huge oscillations.
Yeah.
And so much of it has been about how do you condense the like height of those curves and how do you actually just like, it's going to be like this. There's nothing you can do about it, but how do you just make it have less of an impact on you?
It's a great way to look at it.
Totally. And all the routines is doing exactly that. It's just like shrinking so that you're a little bit less rattled, like the driver that cuts you off.
Yeah, or the bad news, right? The deal that blew up, the this, the that. But I think that also takes, experience. And the longer you're doing something, the less, you're going to have those really high highs and low lows, right?
Yeah.
So there's a combination of things. But those things, routine definitely helps.
Yeah.
If you're setting yourself up for the day properly, you're ready to go.
Yeah, you're a little more grounded going into the day.
What about the rest of the day, into the evening?
Let's see. During the workday, I really don't put many rules around grouping meetings or doing this, doing that. Like,
no,
I think
but you have an intense calendar. Like you're trying to jam a lot into a work day.
Yeah. When my mentality is when I'm working, I'm 120%.
Yeah.
Like I don't want breaks during my day. I don't want to I just kind of want to go and pack as much as I can into that. because what I don't want to do, like, I'm not someone that like likes working around the clock. I need to like shut off.
Yeah.
And so I would rather just jam in the workday. And so I don't put any rules or restrictions around like I'm blocking 20 minutes for lunch. Like, no, if I skip lunch, like it's not the end of the world. I'll be fine. Like I just go wherever the day takes me.
Yeah.
And then
do you end the day typically by a certain time based on that? Like where you just want to start winding it down? I mean, on a normal day, not like, oh, you have a dinner or an event or whatever it is.
You know, what I've kind of found is it depends on if I'm in office or working from home. If I'm in office, I'll get out of there by like 6:37 and transition to home. And then maybe I'm doing like another like hour of active work at home.
Yeah.
Other than that, I'm just responding. Like I'm responsive, but I'm not like actively working.
Mm-hmm.
And I'm kind of just having a bit of like an evening routine and just like winding down on my day.
But if you're responding, you're kind of working. That's funny because
I know. I guess I don't like when I'm responding to emails. To me, doesn't feel like work.
Yeah,
because I'm just like talking to people. I like talking to people.
Yeah, which is it's funny because when you were saying that, I'm like, wait a minute. You know, I kind of work around the clock from that standpoint because I'm never. I pride myself on responsiveness.
Yeah,
I always have. I mean, and the nature of my work, you know, as a commercial real estate broker, if somebody reaches out to me early career and I'm not really responsive, I'm potentially losing that client, that deal that I'm you know, I really have been under the gun for that stuff for so long now that, you know, even though my role and responsibilities have changed, I'm the first person to respond to an email unless I'm doing a podcast.
That's so great.
Like, you know, it's my nature. I can't even, if it comes in, I have to respond to it.
Yeah.
Just because I can get it off the plate and not like worry about it later.
Yeah.
I don't know it's the most efficient, but it definitely has helped me with clients.
Yeah.
Because they know they can count on me.
Yeah.
24/7 practically.
Yeah. I love that. I mean, I think one of the things that I've started to work back in and want to do more of is I feel like when I was at Bain early in my career, it was very drilled in me like short email response times. Even if you don't have the answer, just like, okay, got it.
Acknowledge.
I'll get back to you. Yeah. And at some point I lost that. Yeah. And it was more like, oh, like you don't, like I don't need to respond immediately. And like if I get back to you in a couple of days, not the end of the world. And I stopped even acknowledging receipt. And it was just like, I respond to every email, but it's going to be on my timeline.
Totally.
And now I'm like, yeah, I think I'm just going to go back to saying like received.
Yeah.
And
that's what I do.
And then deal with it.
We'll review. Like it's simple stuff.
Yeah.
And I'll send emails in the subject line. You know, like I'm a fast communicator.
Yeah.
Because I juggle a lot.
Yeah.
So if I'm not doing that all day, I mean, the end of my days, I'm not going to bed.
Yeah.
You know, like just catching up on all the things. It's not even possible to catch up
totally
in a 24-hour period. And the longer that something goes off, the higher the likelihood that it's gonna fall between the cracks on some level.
Yeah.
So for
and
sure.
I love being on the receiving end of it too. Like I love when like the busiest people, like our busiest LPs will just be like, we'll reply and just be like, got it.
Right.
And I'm just like, if they can do it, like I can do it. And
totally.
so it gives a person on the other end comfort.
I think so.
But there's some people that are totally against it. So I feel like it's
totally.
I think it's a controversial
it
topic.
Is. And I think it's also it's evolved.
Right.
Right.
Totally.
So it's also generational.
Yeah.
Right. Everybody has a certain style and habits.
Yeah.
So what would you say is something? Let's just talk. We have a few minutes here. Let's talk about eating and sleep.
Okay.
Because I think those two things are, you know, something I really try to focus on that keep me centered.
Yeah.
How do you eat?
I'm like, I've cared about what I eat since I was in college, if not high school. Like I've always optimized for like, okay, how do I get the most energy and the most nutrients?
Really? I have not
cared about it. It's so funny because it's like I now, like back then I probably identified as a healthy eater and I don't now, only because it feels like everyone and their mom is a healthy eater. Yeah. And I'm like, okay, there's people that do it way, way better than I do.
Well, there's healthy and then there's like obsessed, maybe taking it too far, which might be me. Very possible. Yeah.
Okay, well, I want to know your habits. I actually during the day will keep what I eat pretty much the same.
Yeah.
And it's usually around like in the morning, it's pretty much always an RX bar. And if I'm feeling extra hungry, I'll like layer almond butter on top. Like it's just like, I don't know, I've just done it forever.
I love almond butter, yeah.
And then for lunch, I am optimizing for protein. So sometimes it's like cottage cheese with things. Sometimes it's actually like a huge serving of Greek yogurt with a bunch of like fruits and nuts with it. Sometimes it's a salad with grilled protein.
Yeah.
So it's like kind of protein. And then dinner's totally wild card. It just depends. Like, especially with where we are at Bonside, so much of my evenings are spent out. And so I'll just find the healthy option there on the menu. But honestly, like I'm pretty like just listening to my body. Yeah. It's like if I'm hungry, then I'm going to eat this, and I'm going to like go for like if I'm craving something crunchy, I'll incorporate some crunch. Like if I'm craving bread, I will eat I'll just like figure it out.
Yeah.
And as long as I don't feel like I know what I feel like when I'm eating right. And I know what I feel like when I'm not eating right. And so it's just optimizing for that feeling with whatever I'm eating throughout the day.
Totally.
Versus I think if I had more time, I'd probably slowly become maniacal about it, and I would love it. It would be a ton of fun. I just need to I haven't invested the time in researching to become maniacal about it.
Got it. And sleep. What is there a certain amount of sleep you try to get? Or are you not as necessarily focused on, the type of sleep and wearing a wearable to track it and things of that nature?
Well, I wear an Oura Ring.
There you go.
I'm not like obsessive about it. Like I don't think every single day I wake up and check it. But I check it often. I sleep for 8 hours. I don't have kids. I have the rest of my day to work, so I'm not someone that's like, oh, I only have 5 hours to sleep. Like I have time to sleep.
No, that's good though. That's the goal, is sleeping 8 hours.
Totally.
Good. So you're nailing it.
Yeah. So I sleep 8 hours. I generally am in bed by I would say 10:30, 11, and then 10. I guess like a little bit less than 8 hours, 7. I wake up by 6:30. Yeah. But it feels like 8 hours. 10:30, 6:30. That's 8 hours.
Yeah, totally.
And I'm really right now working on getting more deep sleep. I only get 40 minutes to an hour of deep sleep.
Yeah.
And I took I put Epsom salt in my bath. I took a bath, which I don't do often, but I did. And I put Epsom salt in it. And I got 2 hours and 4 minutes of deep sleep.
Wow.
This was on Monday.
I need to try that.
I did it Sunday night, and I checked my Oura Ring on Monday because I was like, I know I nailed my sleep last night. And I was like, do I need to do this more often?
It's amazing.
I don't know how else you maximize deep sleep.
There's a lot of different factors that I've heard, but it's funny because a lot of people more recently I hear talking about they want to become professional sleepers. How, everyone's thinking about all the things, the wellness things, and just being as healthy as possible. And I don't think generally people really focus on sleep, which is probably one of the most important things.
Yeah.
It's more popular now for sure.
Yeah, definitely.
So before we close, where can everybody find you?
Yeah, they can find me /Bonside in a couple of places. LinkedIn, we're always posting stuff. I'm always posting stuff on LinkedIn about what we're doing.
Yeah, I love your LinkedIn.
I try to keep it human to human versus, classic LinkedIn chatter. Totally. You can find Bonside on Instagram. You can find me there. Bonside is Bonside Inc. I am Neha Gov, G-O-V. Twitter. We're on all the things.
Not tough to find you.
Yeah, not tough to find.
Excellent. Well, thank you so much for joining me today.
Thank you. This is so fun.
Yeah, it's so fun. Thank you.
Always a good time.
Yep.
I just wanna have peace. Pay for the bill, let them take my card, never see the receipt. Good health, we prize, but everybody around prosperity. I just wanna have peace.